morning, my friends. All right, it is 9:30. 9:30 market open. Stock is at 259. We were up in a pre-market. We were up around 2%, 3%. I think we gotta start our morning, our one-time Friday stream with some nice classical music. Let me know if you can't hear it. And a nice morning prayer. But before I do that, I gotta hop in the Discord voice channel. All right, hold up a sec. I gotta hippity hoppity in. There we go. Should be in a Discord. Let's see here. Okay. There we go. Now I'm in the Discord. Okay. Oh, it's using the wrong desktop audio. Hold up. I'm gonna have to adjust it. Let me know if you don't hear any music. Okay. Cool. No music. Okay, hold up. I need to fix that. Properties. Okay, there we go. Okay. There we go. Got some music. Oh shit, okay. So we're moving up. We're at 268. Up 5.77%. Right. Now, let us read a nice Bible prayer before we continue. Okay. I'm gonna pull a God pill here, right? In the days of his flesh, Jesus offered up his prayers and supplications with loud cries and tears to him who was able to save him from death, and he was heard because of his reverence. Hebrews 5:7. Is anyone among you suffering? Let him pray. Is anyone cheerful? Let him sing praise. James 5:13. Alright, thank you everybody for tuning into the morning prayers. Now we'll go into Gamestop and cover what's going on. Alright, let's take a look at a nice little chart. I'm gonna bring over a little picture. Okay, here we go. Bring this little guy over. GameStop currently at 264, up 4.24%, looking pretty good. Can I get an amen in the chat? Thank you guys. Amen, amen. Amen. Alright. Cool, so okay. Let's start with some analysis. So looking at pre-market today, we saw a bit of a gap up like this, and we made it to the top of a channel. So we're at the top of the 268, or actually rather, we're above the 264 channel. Above the 264 channel. The price is at 265, 267. It's really volatile right now. And I'm quite sure for those of you who were able to get into those July calls or whatever yesterday, they're popping off right now at market open. But looking at this picture, okay, this picture like does not want to fit on my screen. But if you look at the Scion line down here, which is implied volatility, you can see that between yesterday and today, the IV is like a little bit higher, right? Like the IV has been going up. And let me zoom out to the daily chart, and we can take a look at IV compared to January. Okay, let me take a better screenshot. Okay, there we go. This is a little bit better. Okay, so if we take a look at IV compared to January, so this was the point at which the stock was $40. The IV was about 20 something percent. Turn the music down a little bit. Gotta get it perfect. Okay, that's a little bit better. But anyways, at this point when the IV was 20%, and in January the price was around like $30 to $50, and we take a look at currently right now, the IV is about the same at around 20%. And so this is not like the IV of a specific contract. It's just, you know, the aggregate average, I think. And so relatively speaking, the IV right now is still extremely low, yet the price of the stock is at $250. So what we can say is that the gamma squeeze hasn't even started yet. There is no gamma squeeze right now. And if we were to see gamma squeeze, we would be seeing the implied volatility going up. Now we can take AMC as a reference picture. And take AMC as a reference picture. And looking at AMC, you can see that the IV for AMC is starting to get jacked. So it's hitting the 40% range. And so if we kind of eyeball it and look at where that was in January, the 40% range is roughly, so we just extrapolate up, it's roughly during this climbing period right here. And so that's really interesting because AMC hasn't like AMC hasn't gone completely hasn't actually what this is telling me is that AMC hasn't actually completely started squeezing yet, like gamma squeezing. A lot of what we're seeing is just a lot of options and leverage pushing the stock price up. So it's very, very interesting to me. Very, very interesting to me to see that the IV is still decently low, yet the stock price is extremely high. So I think AMC is a little bit ahead of GME in the sense that its IV is already jacked and it's already moving, making a quite a rather large move to the upside. But I think that one comes after the other. So you'll see AMC, you'll see AMC go first, right, and then GME will follow. 1 second. For some reason, my 1 second. Okay, my stream YouTube is like buffering on me, so I am not able to see the live chat nearly in real time for some reason. If you guys can just type some random garbage in live chat, just kind of monitoring it and seeing if the live chat is okay for me. It's kind of weird right now, but anyways, it's 9:38 right now. Thank you guys. Okay, there we go. Okay, so it's okay. The latency isn't as bad. So the stock is at 262 right now, and it is 9:39. Volume on the first minute is 552,000. So, you know, I think what's happening is we're still having AMC stealing most of the volume, right? Like if we go to the daily chart and we take a look at daily volume, in the past couple days the daily volume was around 14 million, 21 million, 15 million, something like that. And if we go to AMC, you'll see that AMC's volume is much higher, and it's around like 150% of the float in one day. And I think the reason why is because AMC is going to go first, and then we'll see GME pick up in volume. How I imagine they would squeeze these stocks if it was the same fund doing it is that they would probably do it one at a time, because that way they're able to concentrate more capital on one stock and let, you know, the high frequency trading algorithms drag the other stocks up first, so that when they swap over from AMC and go to GME, they'll have a higher starting point and they'll be able to do a better job at trying to get that margin call going. But holy cow, AMC is at almost twice the height of January's peak. And this honestly makes me really excited about GME, because I have no doubts that they'll be able to get this above January's peak for GME. looking at implied volatility, of course, because the price is already 250, right? Yet it's the same IV as back in Jan when the price was only $50. So this is incredible what I'm seeing with AMC. If we look at the 1 minute, quite a sharp rally in the pre-market, followed by another sharp rally at market open. So anybody holding positions or calls on AMC is probably going to do really well. And I do see AMC hitting maybe... Okay, so AMC's magic number is $40, I would say. Because some of the highest strikes on AMC are $40. So if AMC gets past the highest strikes, what can happen is the gamma squeeze can be like in full effect. If we go to GME, so for GME, what we want to pass is 410, I think. I know a bunch of 490s were available recently, but the majority of these call contracts are concentrated around 400, around the 410 region. Well, the majority of the contracts are concentrated near at the money, but what I'm saying is if the stock can exceed 410, then you can get the maximum amount of, you know, calls into money and then push a nice gamma squeeze. Now, does it look like we're gonna get this? The volume is still decently low. It's being stolen by AMC at the moment, so I think it's entirely possible that we end up trading sideways for this particular week, which is okay. Like, it's fine. I think by the time that GME picks up, AMC will be done. So yeah, like I think that AMC can go into next week, but after that I think it should be finished. I think GME will get its turn. Now, for folks who were wondering about like July calls, right? Like, should I... Oh, okay, yeah, let me let me turn the music down a little bit. I'll make it really... Okay, there we go. A bit lower. Hopefully that should be okay. Let me know if it's still too loud. But for folks wondering about the July calls, right? Ideally you would wait for a dip. Like, if you wanted to do a July call, you would wait for a dip first, because the IV is a little high now and the stock price is a little high. So the contract itself is going to be a little bit expensive today. So you might want to wait a little bit, let some of that theta decay, let some of that IV crush come in, and hopefully that contract will be more affordable. Dragon Slayer 89, we have another 4,991 options in the money with another 1,868 at $260 today. Oh yeah, so there's a lot that I don't know if it's hedged or not. If it's not hedged, we could see a pretty good ramp to like the 270s. But I think that I think that there's a higher probability that we trade sideways, purely because of the volume discrepancy, because AMC is really just hogging all the volume right now, and I think that we'll just need to give AMC its time, finish up, before we see all the volume divert into GameStop. Spaz AB. Citadel on last filing has a 150% plus position on AMC. Do you think they are pumping it to meet margin, essentially pushing the can further down the road? Interesting. So Spaz AB, do you know how many shares? Do you know how many shares are owned by Citadel? And hold up a second. Let me just check one thing with my chat settings. Hold up a sec. I think my chat settings, I'm gonna try to check if I have slow mode on for chat. I gotta turn that off. Okay, I think we're good. Yeah, I think we're good. Yeah, just let me know if there's some weird like settings with chat or whatever. Citadel has 750,000. Okay, so since I haven't actually read it, my question is that 750,000 owned by Citadel as a hedge fund or Citadel as a market maker. Because what can happen is the market maker can own an inventory of shares. I don't know if they report it though. That's something I don't know about. But the market maker can own a pretty sizable position, but this is only like inventory. So like if they are making a market, they can be selling and buying into that inventory. So okay, so it is Citadel as a hedge fund with 750,000 shares. That's interesting. They could be using it as a part of an options strategy. So if they own a certain amount of shares, they can start playing calls and puts on top of it. And I would speculate that's the reason why they have shares for AMC. Potentially, let's say they wanted to dump the price of AMC, right? Like via put options or something. Right, so 750,000 shares, not including calls and puts. Does anybody know if they have calls and puts on AMC? Because that would be more, that would give more information as to why they actually have 750,000 shares. The helper 705, will whales prefer another rug pull or delay on the squeeze action for setup around shareholder meeting? So there was a removed post on Superstock about this where they said that they think it could be 2 MOASs. I don't think so. I think they'll just go. You might see a rug pull on AMC again. Like, I mean, we saw one yesterday, right? We saw a rug pull over here, right here. But I don't see it as I don't see it stopping it. Like we can see it again today. We can see a couple rug pulls today, but I think it's just gonna run. It's gonna run. It's gonna squeeze, and it's gonna finish. And honestly, I can't see a logical reason for why the long funds they would be trying to pump AMC. It's not profitable unless A, you get people covering, or B, you get enough people FOMOing in, right? But like most of retail has been mostly buying and holding, right? They don't want to sell. So I see it as a squeeze maneuver. So I think AMC will squeeze. AMC doesn't have any diamond hands and isn't as shorted. Yeah, they could still squeeze it though. There's enough short interest for it to squeeze. How high can it go? So, okay, let me see if I can answer that. I'm gonna pull up the AMC options chain and we can take a look. Okay, here's AMC options chain. 528. Atreus, where can I find your Google Doc link for all the DDs? You can find it in announcements. It's linked in announcements. But anyways, if we take a look at AMC options chain, we can see that firstly, if we look at volume, it looks like with all this volume picking up, you'll probably see some pretty crazy open interest. Well, technically, since today is Friday, right, a lot of these are going to get closed. So because they're going to be closed, right, like it doesn't mean too much. But yesterday the volume for AMC was quite high, and overnight the open interest did update quite a lot. Like you'll see here, there's like 40,000 right here, 40,000. The bulk of things are concentrated around the 40 strike. So right here, over here, 39,000, 12,000 at 12,000 contracts near the 35-ish strike. And so basically AMC can ramp this week if they push it, but they will need a lot of firepower to push it because the call inventory isn't exactly the highest between these strikes. So for example, the call inventory here and the call inventory here is lower. So those are regions where they're going to have to gun the stock pretty heavily to bring it to where they need it to be. But once AMC exceeds the $40 strike and it goes like further deep in the money, the market makers, they need to hedge everything. They have to hedge everything. They can't just say, they can't just not hedge it, because those are in the money and they risk being exercised, right? So, you know, once it exceeds 40 max strike, I see it really just taking off. This morning we saw it test it. It went to like 38. So looking at the morning, it went to 38, but it was hard rejected. It was hard rejected 38, and let's see what happened. It dipped below VWAP and then it kind of bounced back in a V-shaped pattern, and it's trying to retest it. The volume is lower than the morning though, so it's trying to do it on lower volume, but it's still decently high volume. Looking at GameStop right now, the volume is around, on average, 50 to 60,000. 50 to 60,000 volume. So my prediction for today is, I think that unless we see like a huge push in the power hour like we saw yesterday, we'll probably go sideways for today, and that could be good for people trying to like open new positions on GameStop, especially when the implied volatility will go down and the price will likely go down a little bit later today. So if you're looking for an entry, maybe wait a little bit. But you know, it's always possible that you're gonna see a really large move during power hour or something and you're gonna miss it. So just watch out for that. rcook425, remember when you shared the CV VWAP trading view chart? Should that be applicable to AMC2 if it's modified appropriately? Yeah, so you have to go in the script for that, and then you actually have to, there's a list of exchanges in the script. You need to change the exchanges to specifically exchanges that trade AMC. So that script wouldn't work with AMC until you actually modify which exchanges you're looking at. So yeah, you'll have to do that manually. Okay. 9:52. Let me just turn down the music for now. I gotta focus a little bit. There's a couple other charts I do want to pull up. Okay, so I do want to talk a little bit about. So this is a good question from Paula. Pull it up. Okay. So Paula was asking. So you have, so you want to talk more about those infamous July 800 calls, right? So let's talk about it. Let's talk about it. And let me pull a couple things up. Okay. Anyways, so I have January 22nd 300 calls. Okay. You mentioned low strikes had low convexity and suggest to roll to a higher strike. Could you briefly elaborate what convexity means? I was actually thinking of cashing out an 800 call to exercise the 200 call. What do you think? Yeah, so for folks like in this trade who want to like seriously make some huge gains, you would be doing options, like a couple of options. And so the sole option that I think is pretty solid for this was July 800 call, and if you had something else, I would say, you know, rolling to it is not a bad idea. So convexity is like, it's very interesting. So for example, if the stock price was to hit $1,000 and you're going to compare the returns from a 410 call to a 800 strike call, at $1,000, the returns for the 410 call, I would say, are around like 40 times. These are just random estimates, by the way, but it serves to illustrate a point. But at an $800 strike at $1,000 stock price, and we're assuming it hits like pretty early on, so we get a lot of that extrinsic value, then that 800 strike would give you 120 times returns. And it's only magnified as the strike gets higher and higher, and there's more intrinsic value, as well as, you know, extrinsic value if it hits early. But at 2,000, right, like maybe this is like 80 times, but this is 250 times. So essentially, convexity is that basically when your strike price is higher it increases the ceiling at which your returns can exist. So for example, if let's say the yellow line here was to represent the returns from a 410, and on the x-axis was stock price, and on the y-axis it was return, right? So I'll call it percent, which is like your percent gain. Then if the yellow line was to represent the 410 strike, then as your stock price goes up, it's gonna go like this. But if you compare it to so like the type of curve is not exactly like this, but the relative difference between the two curves is what I'm trying to illustrate. So don't take this curve as if it grows exponentially or it grows logarithmically. That's not the case. But the convexity is really about at the same stock price with a higher strike, and it usually happens at maybe like the halfway point between the two strikes. So we're looking at like $600. You'll see that the gains become like way higher, like exponentially higher. And that's the convexity of returns. When you choose a higher strike, your returns are capped much higher. So when you're choosing a low strike, what you're basically saying is I'm limiting the growth rate, kind of. It's a tricky concept to wrap your head around, but when you're choosing a lower strike, you're basically capping your growth rate. So if the stock hits like 2K or 5K or it keeps going, you'll make much less than you do with an $800 strike. And that's what I want to illustrate here, the relative difference in returns. And keep in mind, these curves are not necessarily representative of the actual growth rate. It's more just to illustrate that there's a difference between the return potential of different strikes. Now, I don't think January is particularly the best, in my opinion, because that's way too much time. You're paying for way too much time, and I think that the squeeze is already starting, I think. It's about to take off soon. And I think that July 16th is a little bit more reasonable because I do see this thing finishing in like 1 to 2 months. And so July should be pretty safe and it should be enough time. I think January is overdoing it in terms of time. So you could always reverse roll. You can reverse roll and turn a Jan 20 into a July 800. In my opinion, like the 800 is the best out of all of these. I'm holding one right now. It's like it's up a lot. It's up a lot right now. But basically the strategy for the 800 is when the implied volatility is still low. It's going up right now, so this is implied volatility. Your entry is here when IV is low, and so around here is your entry for the July call, and your exit, assuming you weren't able to time it before T21. It's not easy to time it, but when IV goes up and GameStop maybe does a little pullback and then it squeezes, and then it peaks, right? It peaks at some point, not to scale. It can go really high, but assuming this is the curve that we're looking at in the future, you want to sell those calls right into the peak. You want to sell those calls when IV is like jacked, so you want to sell those calls around here. And of course, if the stock is able to hit like $800, your returns are, and I covered this yesterday night, $20,000 put into the July 16 is a $1 million return. When the stock hits $800, it's a $1 million return. And so that's the July play. You enter here when IV is low, you wait for the MOAS, and you sell during the peak. And so that's what I'm playing. My entry was around here. So it's up a little bit, but because of convexity, it's only up like, so convexity also has to do with like the growth rate. Like initially your calls, they'll grow like very slowly, but then as the stock price, as the strike price increases, they'll grow like exponentially faster. So I'm here right now. I'm like near the linear growth area. So my stocks are, my calls are growing linearly, but as the stock price goes higher and higher, they'll start growing exponentially. So yeah, my calls aren't up like a ton, like compared to what they could be up. So yeah. D with cars, how are you going to predict and manipulate a stock? I mean, it's not a prediction, right? Like, all I'm saying is that we're gonna MOAS, right? Like, that's a good thing. Like, we're all thinking that, right? So there's no real predictions here besides just saying we're gonna MOAS, right? And so if we're gonna MOAS, you just want to get in when the IV is low, right? And then you want to ride the MOAS, and then you want to get out at the top. That's all there is to it. No TA, nothing crazy. It's just a simple look at implied volatility and a simple, statement saying we're gonna MOAS, right? Which is a good thing for us. And Farhan, what percentage of retail do you think has to hold for this to get to crazy high numbers that everyone is hoping for? I would like to say everybody. I think we should all be holding. Personally, I'll be holding my shares, and I won't be. I will not be selling until after the peak. Let me get some tea real quick. Okay, there we go. I put some ginger in it this time. Okay, that's better. Anyways, we're at 10 a.m. right now. The stock is at 258. We're up 1.7%. And if we take a look at AMC, so like the reason why today we're going to be examining AMC with GME is because the stocks are related, right? The two stocks are related, so we can learn something from looking at AMC and kind of applying that to GME. But looking at AMC, what we see is we see like an extended up channel, and the pattern is an overextension. So here it is. And what happened early in the morning, because of the high volume and because of all the orders stacked at open, is you see an overextension of the channel. So it popped out of the channel, returned to the channel, dipped a little bit low, but then resumed the channel. So AMC is in a steady channel, and I can see it heading to the $40 strike, at which point it should break out and just rocket. Alternatively, you could see a pattern, a pullback pattern, if AMC does not want to go. Who knows? Like at this point, it's a coin flip to be able to predict what it'll do. But as you can see, AMC maintaining that up channel is helping GME stay afloat, because GME doesn't have like a ton of volume right now. Like, man, this is hardly any volume. The volume's a joke on GME right now. But basically, the up channel on AMC is helping keep GME also up, right? And so even though GME is stuck in a down channel right now, it's resisting that down channel, and it's trying to push up because of AMC. Great. So yeah, the volume is largely not here. So I'm gonna have to say I think AMC is gonna go first. We'll just have to be patient. If you're holding GameStop, don't jump on the AMC bandwagon. Like, I know a couple people, they jumped onto AMC, and unfortunately, AMC went down. Like, it got rug pulled. So it's certainly risky. And furthermore, if you're holding GameStop, right, and you want GameStop to squeeze, the best thing you can do is to hold, right? Because we need everybody, just to hold GameStop, because that's how the squeeze will happen when people buy and hold. So keep holding GameStop. Don't let AMC distract you, and view it as a good thing. AMC is kind of like, it's kind of like a good reference for what's about to happen to GME. So treat AMC like it's like a predictive chart or something, and then you can apply it to GME, because I think really GME is gonna do way better than AMC when it does squeeze. And also think about it this way: AMC is helping GME because it's dragging all the all the high frequency trading algorithms onto all the meme stocks and pushing all the meme stocks up. So this is ultimately very good for us. Okay, cool. So let's take a look at the options chain for GameStop to kind of understand where we're at. And I think let's start with the May 28 options. So I typically don't do the gamma neutral analysis. I know someone on Reddit does that. I'll focus mine purely on volume and OI. But we can see that the 300 strike is quite popular with around 9,600 OI. and that the region between 300 and the current stock price is slowly filling up with around 2,000 contracts average. And we see there's like a far shot like here, for people with 370 contracts, they're not looking too hot because I don't see enough inventory for us to go from 300 to 370 today. So if you hold until expiry, those calls will be worthless. Typically I would say it's not a good idea to do far out of the money call contracts. Like we're talking like $100 out of the money during during the week of like May 28th, for example, because the probability of hitting is like very low. And again, I think the July ones are very safe. So if you wanted to really hit it home, you could just do July 1, July 16, 800. So like before, my positions were I had, let's see here, I had June 4 370s, which I rolled into June 18 410s. And so I was comparing the convexity between the 410s and the 800s. And I said, okay, well, the 800s have way better convexity, honestly, and the July expiry is way higher too. So I think it was just objectively safer. So what I did is I rolled those June 18s into those July 16s. So I rolled twice basically, and maybe I lost a couple of dollars along the way, between rolls. But I would say it's totally worth it. Totally worth rolling. Something you'll see going on in the spread in the options market is it's actually getting quite big. Like looking here, the spread is almost like $90 between the bid and ask. And so when you see the spread widening on the options market, it's a sign that the market makers are actually just scared of getting burned. And so when they're scared of getting like run over by a train because they see a squeeze coming, what happens is they're going to widen their spread, right? So we're looking at a $4.70 to $5.65 bid ask for the May 28th 270. And so by widening their spread, the market makers have a bit more safety in the event of high volatility. And so I see the spread widening as a really good sign for us, that GameStop really is it's about to take off. Now looking at my call contracts, they theoretically should not be up as much as they are right now. And I think the reason why they're up more than I expected is because of the high spread. The high spread, maybe the ask, I think it's probably showing me the ask price, or even the market price, because when you're trading a contract, when you're buying it, you're trying to buy it near the ask because that's how you get filled easily or more easily. So I guess it's a symptom of the high spread, why my calls are like decently up right now. So that's a pretty good thing. Of course though, when you're selling those calls, you'll be selling near the bid, right? And that'll wipe a lot of the gains that you theoretically see on paper. Cool. So yeah, and that's correct, Chrissy. When implied volatility increases, it also leads to an increase in price. And now because we're looking at AMC, if we draw the implied volatility, it's been steadily increasing over the couple days. It's increasing. And so I think AMC has almost reached like a quote unquote like escape velocity, where if its IV keeps going, it's gonna shoot like January did. So I think when AMC reaches escape velocity, there's no going back. Like they're gonna have to commit to this and just squeeze it. So I think that's what we're waiting for. That's what we're waiting for on AMC. If we take a look at GameStop, the implied volatility is not near escape velocity yet. So it's kind of like this, and it's kind of like this. Like GME needs to go like over here first. The implied volatility needs to go over here, around like the 40% region, before it can actually just truly take off. And I think that happens if we exceed the $300 point. So I think next week we'll have a really high probability of actually exceeding $300. And at that point, the IV can just take off, and that might be it. That might be it. But it has not happened yet, and I think I think GME is still dormant. Its volume is being sucked away by AMC right now, so we'll have to be patient. We'll have to hold and be patient. And I think it's coming sooner or later, right? Like payday is coming. there's nothing to be worried about. I think that the payday will come, and it will be soon, in my opinion. And you know, like, uh, they wouldn't let GME run up like this, right? Just to watch it dump back down. They've done too much work. They've done way too much. They've done way too much work getting the stock up to like $250. In my opinion, this is the base, right? Like, this is the launch pad, from which we will take off. I do not see this going back down like crazy. Now, let's take a look at the other meme stocks, because people have noticed that when these stocks are going up, some of the meme stocks are going up. So, for example, if we take a look at like Palantir, like, yeah, like Palantir, like, you know, it was basically a meme stock, but it's going up. Palantir's going up. MVIS is up. Yeah, so a bunch of meme stocks are going up. I wonder if EH is going up. Yeah, even EH is going up. Okay. EH is not such a good stock in my opinion. But yeah, it looks like everything. It looks like a bunch of meme stocks are following along. So that's pretty funny to me. Costs. Yeah, let's take a look at costs and NAKD as well. So take a look at costs. Cost is up 22%. Wow, 22%. NAKD 26%. Yeah, this is crazy. BlackBerry 17%. Wow. And so what you'll see is like a lot of the more like low cap and mid cap stocks are squeezing up like 22%. Keep in mind, GameStop is not a low cap stock as of now. So it's actually harder to squeeze GameStop. The reason why we don't see GameStop up like 12% like the other meme stocks is because of its higher share count, right? The higher amount of shares, as well as the price per share. So it takes a lot more money to push GME up. So you can't have like a couple high frequency trading algorithms like automatically pushing stocks up 20% on GME. Like, GME is too heavy, if that makes sense. So don't be alarmed that like GME is in the red right now. Like, don't be alarmed by this. It's just a symptom that GameStop is, you know, not a small cap stock, right? And it's going to take a lot more power to push it up. So we'll just have to be patient. When the volume from AMC kind of diverts to GME, I think we'll see a turnaround for GME. I think we'll see some real action. But as of now, I do not expect us to see anything crazy with GME. And, you know, again, I maintain my stance that there's a higher probability of GameStop ending sideways for the day. Dot peak. Any reasonable chance implied volatility goes down far enough to cause a good price drop in those July 800 calls, or would you just go for it even now? Okay, so earlier on stream I recommend people wait, right? Wait because the prices are jacked, right? I'm looking at the price right now for a July 800. It is $1,215 per contract. It's a little pricey. My average is $6, $640. Do I see IV going down? It's possible. But IV is really jacked right now. Oh my god, what are they doing? Okay, let me go to AMC. So they're starting a short attack again. Remember folks, no stop losses. Stops are only for the squeeze, not for this. But they're attacking it again. So they're attacking it again, and the volume is pretty low. Look at the volume. 91,000, 100,000. So it's nothing significant. Yeah, nothing to see here, folks. They're just short attacking it. They're scared as fuck right now. I'm looking at the options, and even though the price of the stock right now is below yesterday's like ending price, right? Yeah, so it's below yesterday's ending price. My call contract is actually still twice the price at which I entered. So it's $11.50, well, 1,152 compared to 640. And what that tells me is that implied volatility is still super high. Super high implied volatility. So do I see IV going down? No. Unfortunately, I think if you're trying to enter July 800, maybe just at the dip today. But the implied volatility is too high, to the point where if you just wait the whole day, like, I don't think it's gonna settle anytime soon. So I would say around now is when the is when the delta can bring down the premium of those July calls. So I think the best you guys can do is wait for the delta to go down. Well, not the delta, but wait for the premiums to go down because of the delta, because price is going down, right? And so if you can scoop up like a July call like for cheap or something, like as the price keeps going down, that would be advantageous. But again, I do want to remind folks that the implied volatility is a little high right now, and those contracts are a little bit pricey. So just keep that in mind. I would say anything under $1,000 is relatively cheap, and anything above $1,000 is a little bit expensive. But anyways, Gamestop is at 247 right now, minus 2.1%. That's definitely a short attack right there. GameStop has experienced a quite major short attack. Looking at AMC, AMC has a bit of a minor short attack, and let's take a look at like BlackBerry or something. Not really. And an MPIS, nothing at all. So it looks like they're really scared of GameStop for some reason. They targeted GameStop really. Like if we look, they dropped GameStop from 257 to 246.6. I think I agree with Trey. Like they really need to get it under 250, because there are, if we look at the options chain, there are 4,000 call contracts at the 250 strike, and that could be really problematic. But anyways, for the viewers here looking at this huge red candle, these huge red candles and the short attack, nothing to see here. This just makes me looking at this, it makes me more bullish on the stock, because they wouldn't do this if they didn't have a problem. You get what I'm saying? Like, if they have a problem, right, this is what they would do. And they would only have a problem if the stock was too high, right? So if the stock is too high, and we see them continuously pushing this up on low volume, and they can keep going, I think that's extremely bullish. So yeah, I'm excited about what I'm seeing today, because what I'm seeing today is we're winning and they're scared. I mean, retail has always been on the money about this trade. I remember somebody mentioned that in the Discord. Like, they were able to have a little talk with the mainstream media, and the mainstream media knows. They're like, retail's on the money. We're publishing fake news, right, to try to get people to sell, but it's only because retail is actually is on the money, and they're about to win this trade if they don't sell. So you'll see mainstream media pumping out like garbage articles telling you to sell or whatever. Yeah, just turn them off. You know, never ever go back on CNBC, because we are on the money. No matter how much I see this stock dipping, no matter how low we go today, whether we go to $120, I don't care, because I know this is a winning trade. So they can short attack it all they want. It just makes me more confident that we're gonna win. And also, it makes the premiums of those July calls go down. So if you actually want to get a July call, you can wait a little bit longer, right, and let them short attack it. And when the premiums are down, you can scoop some up if you want. Again, completely up to you. I'm not going to push it. People just ask me what I had, and my response was I had July calls. So if you're interested, you can do it. If you're not interested, don't do it. But anyways, what we're looking at is a quite major move to the downside, and it's a little bit divergent from AMC, because if we look at AMC, the short attack was a little bit less severe. It is looking like it's getting more severe now, though. AMC is getting a significant short attack. Oh my god, they are pooping their pants right now, because if AMC went over $40, like I said, based on the options, it's gonna rocket, right? So they're really keeping this this down $30. I even mentioned yesterday in Discord that if this passes $30, they suddenly have a huge problem, and they need to get this down back down under $30, or else they risk a serious possibility of having to hedge into after hours and seeing a huge gap up into after hours and pre-market on Tuesday. But it looks like the AMC short attack has spilled over into GME, and GME is back down at 242. Okay, and it's looking similar to March, but you know what's interesting between March and today? It's that you see these eddies right here. So I call them eddies. A lot of people call them eddies, and basically these eddies like form because the short attack is weak, right? People are able to interrupt the short attack and buy in. So compared to March, when we saw a straight drop down like this and a straight bounce up, we're seeing eddies. So we're seeing eddies appear. And what this tells me is that this particular short attack is a weak short attack. And then you take a look at AMC. Similar issue, right? Like there's these eddies right here. So they're having really big issues keeping it down. They're having really big issue establishing downwards momentum. I'm looking at July calls. They're about $1,000 a pop. So, I don't have a crystal ball. I can't tell you if it's at the lowest, right? All I can tell you is that it's $1,000 a pop right now. So if you're interested, you can go for it. Again, I don't have a crystal ball. I don't know if we have hit today's low yet. So do not take what I say as financial advice. But you know, just to let folks know, it's $1,000 a pop right now. So pretty decent like premium decrease from this short attack right here. So they kind of helped us out, you know. Let us scoop some new positions up on a discount. All meme stocks under attack currently. MVIS, let's take a look. MVIS, it's a bit of a natural pullback on MVIS. What about BlackBerry? Okay, yeah, BlackBerry is getting shorted. Gamestop down. So Gamestop is at 245 right now, and we're down 3.59%. And again, this movement that I'm seeing today is making me increasingly bullish on the stock. Man, I feel really bullish after seeing this. Okay, so interesting. So I want to compare this to the Citadel style pump and dumps that I talked about in the past. RKT, for example. And so RKT, Tilray, and blah, blah, blah. So like everybody knows that RKT and Tilray and all those other stocks, they went up, right? They peaked and they made a little tippy cone in the after hours. And then they had a little Wyckoff distribution dump, right? So they were more of like a Wyckoff distribution. So I want to quickly compare the AMC, the Tilray and the RKT pump and dumps with GameStop, right? Like, are folks wondering, like, is this a pump and dump? Like, will we see Head and Shoulders and see it going down? And my answer to you is no, and it's a very simple answer. It's a really simple question to answer, because what I actually see going on in the stock, right, is I don't see a Wyckoff distribution happening. And I don't see this as a pump and dump move, because if it was truly a pump and dump move, you wouldn't see this, and you wouldn't you wouldn't see this right here, and you wouldn't see you wouldn't see this pattern. Like during a pump and dump, typically like what happens is it's a lot smoother in the climb, because they keep the buying pressure constant, because that's how they actually get the price as high as possible. So for example, if we took a look at a pump and dump stock, like RKT, right, and then we go to like here, do you see the pattern of a pump and dump? What you see in a pump and dump is you have to see a clear climb first, and then you need to see it test. I think it's called UDAP in Wyckoff, but you need to see it test a high in the pre-market after hours, and then that's a pump and dump. That's a pump and dump. That's what a pump and dump is. What you're seeing in GME right now is not a pump and dump. What you're seeing is a short attack right now, and they're short attacking because they're scared and shitting their pants, which is great for us. But what you're seeing currently right now is, again, you're seeing a complete lack of a smooth climb. It did not necessarily test a decently high. Like it should have tested a high around here, and then it should have dumped straight down in the pre-market, but it did not. And that immediately tells me this is not a Citadel style pump and dump. This is just some shitty short attack because they're scared of the 250 mark. Because the 250 mark is a place of contention for the options market, and you can see some pretty massive delta hedging if it goes too high. But anyways, like there's a couple possibilities for what can happen. Again, TA is pretty much useless at this point because we're in the middle of like a fucking squeeze. But you know, just some possibilities. What happens is they can dump it and the eddies get bigger and bigger. So they can dump it and the eddies get bigger before we see a rebound. Alternatively, you could see a double bottom, followed by a thing called a VWAP reclaim, which is when it reclaims the VWAP. and it could bounce a couple times on the VWAP before reclaiming it fully and breaking out to the upside. But again, I see a down move with larger eddies being more probable, just because they want to keep this going. They really want to keep this going, and I think they want to get it down to like maybe the 222s, 232s. And now there is another possibility, I think, for what can happen, and it's that we could see a gap fill of the previous days, right? So as we can see here, there was a gap up on, what was this, on 526, and there was so there's a gap up on 526, and the pre-gap up point was around $208. So if Gamestop makes a move to 208, right, makes a move here, that's a gap fill, and it's reasonable. Like, to be honest, like if we go to 208, right, nothing changes like for me this week. All it's telling me is that, hey, we're gonna need a little more time before GameStop will start its squeeze, right? Because, you know, AMC is going first. Now, for folks who, like, you know, we're trying to time the dip, again, nobody has a crystal ball, right? So if you tried to time a dip here and you bought some positions, just hold it. You'll be fine. Like, but you don't need a paper hand, because if you do paper hand those calls, right, and the stock does a V-shaped vertical, right, like a vertical bounce like that, you're gonna get screwed. Like you're gonna end up having to repurchase those calls at a higher price. So for folks trying to time the dip, and I don't think I've explicitly said one dip yet. All I have said is, you know, like the calls are going down in volume, in price. Right now it's $9.50 a pop, for the Julys. But for folks trying to time a dip, like if you miss the dip and it keeps going lower, it's okay. Like it's okay if you hold. That's my strategy. When I opened my calls, like it dipped further, I didn't care. I just held. It doesn't matter. Like if we put things into perspective. Real quick, I want to really do this exercise real quick, to kind of put things into perspective. Look, here's GameStop, right? Here's the dip that we're seeing right now. You see that little blip on the chart? That's the dip we're seeing. This is the MOAS, okay? So that little blip right there, right? If you're trying to open a position and like your position, it goes against you for like what, 5 points, 20 points? That's a blip on the chart. I mean, like seriously, that's a blip on the chart, because you're gonna see this very soon. So, all I'm gonna say is, don't panic if you're not able to time the dip properly, whether you're buying shares or buying calls or buying whatever. Don't panic, because if you put things into perspective, it's nothing. It's nothing. Like currently, it's going down right now, right? I'm still holding my calls. I'm not gonna do anything with them. Until I see a short squeeze, I'm not selling anything. So yeah. Anyways, congratulations, Johnny Diamond Hands, for getting them at a discount today. And be sure to thank Melvin and friends for giving everybody a very nice discount for those options. So yeah, let's all have a moment of thanks for Melvin for giving us a discount. Thank you so much, Melvin. Okay, looking at AMC. It seems like they're really continuing their short attack, and again, as I have described, you'll see eddies appearing. So you'll see these eddies right here, and it can continue for a while. But the fact that we're seeing eddies is a sign that their power over these stocks has been weakening, and it is getting increasingly hard to short these stocks, because people are actually buying the dips. They're buying the dips. The one thing I would do here is not sell, but to buy the dips, because buying the dips is gonna hurt them. It's gonna hurt them bad. The more people buy the dip, the harder it is for them to keep this going. AMC bull trap. I call this one soon to time $40 calls. So Joshua, since I don't follow AMC that closely, I'm not able to kind of predict if AMC is a bull trap or not. In my personal opinion, what I've always said in Discord and in my previous streams is that AMC, if it goes above 30, it can move to 40, right? Which we actually saw this morning, because it went above 30, right? It went to 38 really quick. What I also said is that if it goes past 40, right, AMC will rocket. And so based on that, because the short people know this, they want to get it down, right? So we saw them short attack it from 38 back to 30, and now below $30, I think, right? AMC is at $29. Now, is this a bull trap? I don't know, because just as easily as GME can bounce back up, which I think will happen, AMC can also bounce back up. So I can't say. It's up to you. Like, it's up to you. But I can tell you is that there's a probability that it can bounce and recover. And like, I don't think AMC has even gamma squeeze yet. I don't think there's even a gamma squeeze for AMC yet, because the implied volatility is low. It's still decently low at AMC. It hasn't even exceeded the $40 strike. That's when it gamma squeezes. It gamma squeezes when it exceeds the $40 strike. So AMC is having a dress rehearsal like GME. However, I'm not sure if AMC's dress rehearsal will go well. But I know GME's will definitely go well, in my opinion. AMC dropping might just be Citadel selling the long. Sure, it's possible. Like, it's like either shorting or somebody's selling. But it's probably, it could be a mix. Who knows? Like, you'll never know. Could this be the effect of a margin call, selling long positions first before covering? No, I think they would be selling other stocks, and that you would be seeing SPY nosedive or something, if they were truly liquidating other things. How high can AMC go? Like, if AMC goes past 40, I can see it going to 50 and 60. I think it can go really high if it gets past 40. Okay, so GameStop, we're at 242. We're down 4.54%. So unfortunately, I think the worst case scenario today is that we get a rather sideways or slightly down day, like, and then we'll have to wait for next week for some action. But I'm completely okay with that. Well, $30 puts, yeah. AMC, look at Option Sonar. I forgot to refresh my subscription to Option Sonar, so I'll have to do that. Won't do it on stream, but a wall of $30 puts on AMC. Okay, so somebody really doesn't want AMC to go over 30. You know what I'm saying? Like, they really don't. If somebody could verify for me if AMC, if those puts were bought or sold, that'd be great. Can you draw a Pokeball for us? Hell yeah, Pokeball right here. Pokeball. We going up, everyone. Check SPY movement versus GME. So if we look at SPY, we did see SPY go down. So, you know, like, wait, did we see Tesla go down too? So they timed that short attack with SPY going down. Oh yeah, so Tesla went down. Okay, that's interesting. So what we saw is a short attack happen at the same time as SPY moving down. Keep in mind, SPY is still up 0.26%. So that was a rather small move on SPY, but that's interesting that we saw a dip on SPY. Yeah, it's like exactly the same chart, so that's very interesting. Andrew Parker, can you explain the potential profit of a $800 July call if the option is in the money at the time of expiration? I can talk about it a little bit more. Just don't go on super stonk being like Warden's pushing options. I'm not pushing it. I'm just saying that it's a possibility. Okay, so I'll talk about it because people want me to, not because push it or anything. But they, you know, the infamous July 16 $800 call, the MOAS bet, right? If you're wrong about this, all your money is gonna blow up and expire worthless. Okay, I'm gonna say that out loud, nice and clear. If you are wrong about MOAS not happening before July 16, your money will evaporate. In my opinion, I think that this bet is a good one because it will happen, in my opinion. But anyways, you want to talk a little bit about return potential for that call? Sure. Like, while GameStop is dipping and doing nothing, let's talk about this call real quick. So let me pull up a spreadsheet real quick because I can give you the exact numbers if you wanna actually see what the returns are. So Let me quickly fill the spreadsheet out. 6. And like this is what I would call a classic Wall Street bets, like Wall Street bets YOLO. If you were to do this, I mean, I was in Wall Street bets for a while, so I did some of these. They were fun. I mean, most of them don't pay, by the way. Just letting you know, most of these don't pay, but I see this one as a particularly good one. Let me put the implied volatility at around 600% or 700% actually, to better mimic what your returns will look like at $800. But like, I mean, let's walk it through together, right? Like, let's walk through this call together. So just so you know, people getting in on this trade have an understanding of your returns. So basically, if you are gonna do this play, right, you're gonna buy to open, and then when you think it's peaked, you're gonna sell to close. So let's go over the potential returns for this particular option. So here, the number you'll see in each cell is the percentage return. So for example, let's say on May 30th, the stock hits $882. That's a 6,213% return, which is a 63 multiplier. So if you put in $1, you're getting out $63. So at $1,000 stock price, and let's say it's like June 13th or something, your return is 6,500%. And of course, as you move closer to expiry, it takes on more intrinsic value and less extrinsic value. So you're getting 1,728%. But basically, here's my math, right? Like if GameStop during just a gamma squeeze can hit $1,000 before June 15th. So let's look at this. So 67 multiplier, so 6,691%. If you put in $10,000 into the July 16, what you get out is $660,000 and 910 6,000 6,600 $669,000 100. That's how much you get out. So if you put in 10K, you get out 600K. And if it was lower, right, like if it was 750, you would get out around 500K. So if the stock hit 750, you get 500K. If the stock hit 1,000, you get 600K. But those are the returns. Like feel free to screenshot this spreadsheet with implied volatility set to 700%. Feel free to screenshot it if you're doing this play. You can go on optionprofitscalculator.com to calculate these returns. But yeah, so basically, like here's the table. You can take a screenshot, and this will give you a rough estimate of what you'll get. Henry M, why July? Well, because Ryan Cohen said soon, right? And soon is 2 weeks. Is at most 2 months, in my opinion. And also, furthermore, because July is the only date where you can get an 800 strike, right? July is the earliest date. The other ones are like October and later on or something, or August, I think. But you want an 800 strike for the MOAS. Like if you think it's gonna MOAS and it's gonna go past 800, right? Which obviously, right? Like everyone thinks that. Then you want to pick the highest strike possible, and the only date you can do that is July. And furthermore, the shareholder meeting is 6/9, right? And we're expecting big news with the vote count. So we're also expecting, I think all of the DTCC and NSCC rules are actually in, right? So if it's gonna squeeze, it'll take probably 3 weeks, and 3 weeks after June 9th, for example, so it's like 21 days, right? It's like end of June, right? So early July, like 7/1. So the July option gives you decent time, right? For that whole entire MOAS to be captured. And also, yeah, 6/8 is earnings. 6/8 is earnings. Earnings. So basically, what's so nice about July is it gives you so much time. It gives you a really high strike, and it really lets you capture that entire MOAS. So you know, in my opinion, the July 16 is the best. I know I had June 4ths before. I rolled those because I realized, you know, this is not gonna squeeze in like a week. It needs a couple more weeks. So I rolled the June 4ths to July 16th. Yeah. But those June 4ths, by the way, would have paid if you sold them. Even now, if you sell them right now, if you got in when I got in for those June 4ths, they would have paid. They would have paid. So I'm happy for anybody who actually took those that trade on and then cashed out. That was a very profitable trade. It was up like 100-200% too, so you would have doubled or tripled your money with that June 4th. So yeah, I'm happy for whoever was able to hold it and profit from it. Anyways, we're seeing a bit of a double bottom form, followed by consolidation and breakout, and hopefully we'll see a VWAP reclaim right here. VWAP reclaim. And one thing I want to Ashley Kitschy, 7/14 is when the NFT and GameStop coin drops. Yeah, so I actually, that's also something I factored in, right? The worst case scenario, I would say, not really. The worst case scenario is your options are completely worthless. But the second to worst case scenario is the NFT coin drops and something happens. I don't know, crypto dividend on the 7/14 date. And what happens is the MOAS happens then, right? And I think at the worst case scenario, you'll get only intrinsic value from the 700, the 7/16 800 call. So you might not make a lot of money if the MOAS was to be that late. But in my opinion, I think the MOAS is soon, sooner rather than later. I mean, even GameStop, they tweeted on Twitter, right? They tweeted like, GameStop to Reddit, we'll see you soon on the moon or something like that. So I think I'm taking that literally. Like I think it's soon. I'm up 400%, 454% on the June 18 370 call. Congratulations. Congratulations on having that really good position. And if you're interested in rolling that to an 800, by all means. But that's a really good position you have. Congrats. Okay, cool. Lacey Grooms, did you just say there won't be a squeeze before the vote? No, that was more of just an example, like that if it were to happen after the vote, that you would need like maybe 3 weeks for it to play out. But no, the squeeze can happen before the vote. And I can see this starting in June 4th, week of June 4th, and carrying over into the shareholder meeting. So I see this thing like being able to take off earlier rather than later. Okay, Smooth Brain Ape here. Can you explain what's the most amount of money to be lost on those 7/16 800 calls? Is it just the price of the contract? Yeah, that's right. It's the price of the contract. If the stock does not hit $800 by the time of expiry, right, July 16th, you lose everything. Okay, I want to make that abundant and clear, right? I'm not gonna, like convince a large whale to put in 800K, right, and watch it evaporate. I'm gonna be abundantly clear with you. If the stock does not hit $800 by 7/16, it will evaporate. All your money in that call will be completely worthless, all gone. And again, to reiterate, I believe in this a lot. Like I believe it's happening soon, and I think a lot of people are also convinced the squeeze is starting, and I think it really is starting. All we're seeing right now though is AMC stealing all the volume from GME. So Jordan, no, the answer is no, Jordan. And those specific people were people calling me shill. So no, the answer is no. But yeah, yeah, I hope I am abundantly clear with the July calls. It is a casino. It is a casino I'm willing to play because I think it's pretty good. Will someone buy the 800 option if the MOAS happens? So your $800 contract, one contract will be around $65,000. Should it reach 800 bucks, the stock. And so I imagine the spread would be kind of huge. Like we'll see like 69,000 ask, 65,000 bid. So there's gonna be a reasonably loose, like wide market. But so I believe that somebody will buy it still, though at a really low bid though. So there's gonna be a really wide market during a MOAS. So keep that in mind. But I do think it's still going to be bought though. Like somebody will buy it from you. Probably a market maker though. Because like think about it, right? Like if the market maker can make their spread like really wide, they can still like trade options even during a MOAS. They just need to make sure their spread is wide enough so that they can manage the risk, if that makes sense. Sin said, would you sell shares to buy 800 call options? No. It's best to hold. Like personally, I wouldn't sell shares to do that, but then again, it's up to you, right? But buying and holding has always been the cornerstone of this movement. So that's all I can say, really. You know, like it's best to hold, right? Because selling only helps the shorts. Anyways, selling options doesn't, but selling real shares does. That's why you're able to just buy and sell options, right? Like that's why you're allowed to day trade options and not hurt the squeeze, I would say. And of course, as long as you're winning on those options. If you're buying a bunch of options and they're like expiring, like worthless, then you're helping the short sellers, right? So you want to pick options that actually print, because then you're on the winning side of the trade, right? And they have to take up risk. Okay. Carlos Acuna, what do you think about Kramer? Oh, that's funny. I used to watch Kramer back when I was on Wall Street Bets. Like I used to watch a good amount. I used to have my daily dose of Mad Money. He's like, so in terms of what he knows about market fundamentals, I mean he has a knowledge, right? He used to be a hedge fund manager. So he does have good experience. Like there's things you can learn from him. But I also think he's a clown. He's a two-faced clown because, you know, before he was like, well, he's always said, I hope retail makes money, right? But he's also called this trade a ridiculous trade, which I think is the complete opposite. I think this is the trade to be in, right? Like I think GameStop is the trade right now in this period in history, right? Like it is a one-time chance in history. So for Kramer to say that this is a crazy trade or something, I think he's a clown. But now all of a sudden, right? He's like, oh, the retailers are right, and he's trying to get on our side. But you know, I think he's full of shit, in that sense. So I think Kramer's a clown. I think you guys shouldn't like shut him off. There's things you can learn from him, but I think he's still a clown though. Yeah, he's a funny clown. Hubby Bubba, could you talk about AMC recent price action? Yeah, let me talk about it. So like what we've seen with AMC recently is these steady run-ups. So here, rather large run-up here, and let's see here. Yeah, rather large run-up. We see the majority of volume is concentrated on 527. It's putting up a fight right now. It's trying to contest that red candle and kind of reclaim what it lost. But I think what's interesting with AMC is if we zoom out the 4-hour, or even daily actually, we can see that AMC had a pullback already, like testing the March highs, and it was able to really test the January highs. And as soon as it inched above it in a pre-market, it broke out to the upside. And the $40 level is the next breakout zone. So if it passes 40, I see it going further to 50 or 60. And I think what's interesting is also the implied volatility was like here. The implied volatility is here right now. So it's actually much lower compared to January. So I think this entire move here, which is about to happen over here, hasn't happened yet because the implied volatility is still low. In fact, AMC has not gamma squeezed in my opinion. I don't think it has gamma squeezed yet. It's not even squeezed yet, and it's already higher than January, or already almost twice the price of January. So I don't think it's squeezed yet. So when it squeezes, the IV will go back up, right, like that. And that's, I think, when we'll see some crazy price action. It'll go to the 60s, the 50s, and the 60s. Will it do this? I don't know, because I don't have a crystal ball, right? And I don't know if the shorts will be able to win like the AMC battle, right? You know, like there's the Pacific Theater, and then there's the you know, European theater. AMC is like, you know, one of the theaters in this world war. And the hedge funds, they're fighting AMC, and you know, nobody really knows if they're going to win the war or not, so it's really up to chance. It's really up to chance and luck, whether or not AMC is going to do this or not. Now let's apply the same analysis to GME, right? Like, well, like what's going on with GME? So GME has not actually tested the March highs yet. It's not even tested the highs. So once it reaches the highs, like I think that's when it can start gamma squeezing, and testing the January highs. And again, the implied volatility is much lower on GME compared to January relative to AMC. You know, AMC's comparison. So like I think I'm gonna see IV going up a little bit more when we start inching closer to the $300 mark. The 350 actually, it's more of a 350 mark. IV will be a bit higher, and then when it really does break out, that's when IV will be jacked, and that's when your July calls will be printing, by the way. When IV is completely jacked like that and the stock is going vertical. But in my opinion, I think we're at the starting point. Like I think we haven't seen shit. Like we haven't seen shit yet. We haven't seen anything. Like this is a dress rehearsal. Like the true movement right here, right? Like the true movement to 350 and then a breakout to the upside. That's when things get real. That's when your positions will start printing like they should. But we have not seen that yet. We have not seen that happen. But again, I do think the squeeze is gonna happen now. Like I don't see this being a second March. Like I don't think we're gonna see a tank and then we're gonna see like another 2 months of sideways. No, I think this is it. And I think that we're gonna be waiting maybe a week or two before it happens for GME. AMC obviously has already started happening. Okay. Cool. And just let me know if you guys have any questions in the chat. Happy to answer. As you know, we have covered most of the analysis and discussion points for the morning, so I'll be focusing more on answering questions. As of now, we're seeing an up channel forming on GME. GME at 247.49. We're down 2.61%, and it's currently 10:53 a.m. EDT. Hubby Bubba, is the drop this morning their attempt at the March flash crash? I don't think they were trying to do a flash crash. I think they were trying to control the price to be below the strike, the critical strikes. And basically what happens is when the price starts slipping, right, the market makers, they can unwind their hedge positions, right, their delta hedges. And when they unwind their delta hedges, it'll drop the price increasingly. So it's like it's a feedback loop. If they can get it below critical strikes, and the market makers start unwinding, then it'll drop the price. Kevin Hashimoto, check your Reddit. Kevin, message me on Discord. I don't really use Reddit anymore because I don't like Reddit. Reddit is a mess. But yeah, message me on Discord if you want. Desmond Tan, can you explain how reverse repo affects GME? Unfortunately, Adabit knows a lot more about that than me. I would recommend you try to ask Adabit or somebody you know, who knows about Adabit's DD. I'm not big into like reverse repo, so I don't know. That's my honest answer. I can't help you with that. But I do see it increasing. Something like a few weeks ago on your Discord, you seemed a little bearish about your discussion with Kodas, and you said that the street's opinion of us apes was that we were idiots. Has this changed? Well, okay, so long story short, so I actually continued my conversation with him. I actually started probing him with like lots of questions. I'm like, I was requesting documents from him, and like I was requesting tons of documents from him, and I said, okay, here's a couple of flaws I see with your reasoning. Now give me the documents, and I need to see. He didn't give me the documents. In fact, he stopped talking to me. So I was like, yeah, that's it. like I'm not gonna have you on a show. Like if he provided those documents to me, like maybe I would have considered having him on the show. The reason why I never, you know, like on my last stream where I talked about Cojones, about how I was reluctant to have him on the show. I mean, it's still the same. Like, if he's not gonna fully give me all the data and evidence, then I'm not gonna have him on the show. Now the thing about Wall Street thinking retail is idiots, I don't think he said that, or I don't think I said that he said that. What I did say is that retail has a bit too high emphasis on certain aspects of the stock, in the sense that sometimes when retail thinks that there's naked shorting, it's actually naked hedging, which Cojones is right about. There's some naked hedging going on. Like when you have certain options, the market maker will actually naked short to hedge those options. But I wouldn't say, like, I wouldn't put it to that extent. I don't think Wall Street thinks retail is on the money. That's what I think. But Wall Street also thinks that retail doesn't understand a lot of what's going on, actually. So it's a mix. Like, Wall Street is like, retail is right in this bet, but Wall Street is also like, there's certain facts that retail got wrong. I want to frame it that way. Like, I don't want to blow it out of proportion and say, you know, that Wall Street thinks retail is stupid. No. And again, that the bearish opinion, the bearish take I got from Cojones, it's not gonna go away because it's true. Like, I mean, you saw it today, right? Like, you saw the market maker just tank the hell out of the stock. They can do stuff like that, and even on SSR days. So it's a bearish component to the thesis, right? But I'm still bullish on the stock, if that makes sense. Like, the stock is gonna squeeze, but what I'm bearish on is that the market maker can do things to prolong it, right? To delay it, like today, right? Like we saw a tank today, and that's what I got from my talk with Cojones. Oh, I think Cojones said that the street were laughing at us. Sort of, yeah. So they're laughing. So they're laughing at Melvin and at retailers who, frankly, at the ridiculous DD on Reddit. Okay, look, if you go on Reddit, there's some really good DD by like Adabit and stuff. But in the past, like in March, you probably know what I'm talking about, right? Like the DD in March, like the Wall Street was laughing at Reddit because the DD was frankly wrong in March, and it was a joke. It was a joke. So Wall Street was definitely laughing at Reddit in March. But Reddit is more right now. Reddit has gotten they've gotten experts like Dave Lauer. They've gotten pretty good DD like Adabit's DD. And, you know, slowly the quality of that DD has been going up. So, you know, like their opinion could be changing, which is good, you know, which is good. Does the market close earlier today? Will the power hour be more volatile? I think that it's the fixed income market closing earlier today. Yeah, and remember that Monday we have off because of Memorial Day. The markets are closed. Macarite keyboards, would you recommend to buy the July 16th options today, or will they be cheaper next week? Okay, so yeah, I don't have a crystal ball, right? Is today the peak? I can't say. I don't know. I don't have the answer to that question. But what I can tell you is that today is a dip. Is it the dip? I don't know. If we wait for tomorrow, if we wait for Tuesday of next week, like, can it keep dipping? Can we keep getting IV crush? Can we keep seeing the premiums erode on these call options? Yeah, it's possible. Like, it's all possible. Unfortunately, I can't tell you though. Like, you know, if I think today is the time to buy them. But all I can tell you is that today there is a discount as of now, but I cannot guarantee you if it will continue. So I leave that up to you. Really, just use your best judgment. Treat it like you're trying to time a dip. But keep in mind of scale, right? If you zoom out again, if you zoom out of the chart, the dips you'll see going forwards in next week, like maybe like a dip like here to the 209 level. The dips you see on this time scale are blips, right? Compared to the MOAS, right? So like if you're super worried and stressing out about buying now and then there's a dip afterwards, right? Like you missed a real dip. I don't think it's a big deal, because to put things into perspective, when the MOAS happens, like any dips you see right now will be a blip on the chart. So yeah, that's my take on things. Henny M, the option calculator says the profit probability is 4% for the July $800 call. Don't rely on the profit probability. It's completely, I would say, worthless. Because Henny, it's all based on delta. The probability is the stock price goes to the stock strike is completely based on like delta and a couple other factors. It says nothing. That's not I don't think that's how probability and statistics works. You like honestly, you can't really just say, okay, delta is 0.2, probability is 20% that this thing goes at the money, right? Like you can't do that. My personal probability that this is a profitable call option is a 90% confidence. 90%. So 90% confident that this will hit. 10% confident it might be break even or worthless. But I'm leaning towards break even over worthless. But yeah, I'm 90% confident that this will hit. I don't see the squeeze being canceled anymore. I see it continuing in the coming weeks. Joshua, is there something that will kill the IV with the $800 call? I've been screwed at the triple witching day. Oh. The IV will only be crushed if the stock goes sideways for several days consecutively. So I think IV is already jacked at this point. I don't think it's going to go much lower. So I think ideally, like if you got really lucky, you would wait for the stock to trade sideways for several days before you buy in. But again, IV is relatively low still. It's only like 200 something percent for that call. And keep in mind that in January's peak, right, the IV was 1,400%. So the IV is still decently low. So I wouldn't freak out about it if it's not what you want it to be at. Does the dip this morning significantly affect the chance of a gamma squeeze today? Yes, I think it does. I think we're not going to gamma squeeze today because of the large move down. It's kind of shut off the momentum. And I think for a gamma squeeze to happen, we really do need to hit that 250 again. And we do need to rocket past 270 into the 300s. And again, earlier on stream, I did say we would probably trade sideways for the day, right? So we're not really sideways in the sense that there was a big cliff, right? Like who would have seen that coming? But we'll go sideways in the sense that throughout the majority of the day, the stock will be wobbling sideways. But I think Friday will be a boring day. So I think this week will be a little bit boring. But I do see the action kicking up in the coming weeks. Airy GB, how do you know the difference between a short attack and a genuine sell-off? That's a great question. So during a genuine sell-off, the volume needs to be majorly high. It needs to be way higher. It's all volume. You want to watch volume. So and you want to watch VWAP. During a major sell-off, the VWAP will have a sharper down angle. So we can tell that this probably was a short attack because the VWAP kind of levels here. And furthermore, we see that the volume is actually not that significant. It's almost the same as the average volume for the day in the early morning. So I don't think it looks like a sell-off. It really does look like a short attack because of low volume and because the VWAP isn't as steep, doesn't fall as steeply. Enzo, don't you think all the near option strike prices are already fully delta hedged? Considering market makers likely know about the T21 cycles, it's possible, but it's maybe like because you can make the same argument and say if they already delta hedged everything, the price would be way too high. Like the price would be maybe 300 if they delta hedge everything, right? And then you could say because the price isn't high, then they probably have it delta hedged. So you can make a valid argument for both sides, right? So really, like. The answer is like we don't really know. We won't really know. But in my best judgment, they don't hedge everything. At least not the out of the money calls like fully. SP, in your opinion, what is a bigger date for GameStop? 6/9 when the votes are counted, or 7/14? I think 6/9. I think when the votes are counted. I think really that is one of the bigger events. And again, I don't think we even need a catalyst for a squeeze, because we did see AMC just take off, right? Like on like no news. So I can see GameStop taking off on no news as well. Can you go over AMC options and gamma potential? Yeah, so I went over it earlier in the stream. I'll do a brief recap. Like AMC, like if you pass 30, which we already passed, a lot of hedging pressure. So I think what happened is you saw a squeeze to 38. But the market, but they started tanking the stock, like short attacking, and it removed a lot of the strikes in between. So what happened is the market makers, they started unwinding, and they started selling. So the stock is able to consolidate around the $30 range, pretty comfortably. So I think the gamma squeeze potential for AMC is actually lower, because if we go to the chart, right, like a lot of unwinding happened right here, a lot of unwinding. And this really does remove the pressure, like the upwards pressure on the stock, which reduces the potential of a gamma squeeze. So I think I think that it could have squeezed if it passed 30, like if it passed $40. Like if we passed $40, it could have gamma squeezed, but it didn't. So because they short attacked it like crazy, hammered it to the ground. Okay. Is there any reason the gamma squeeze would start in the beginning of next week? I don't assume there's any catalyst before 6/8. It could. Again, as I said, you don't necessarily need a catalyst. Like we saw AMC squeeze with nothing, right? No news. So no, I don't think we'll need a catalyst. I think it could just go when it wants to go. How actually option works, why we need to get 250 or more to exercise them if we've been there for the last 2 days. Doesn't this count? I'm a little confused by your question. Can you try to clarify? Can you show us your filters for options on TDA, or do you have a video? So on TDA, you could go to layout, you can expand layout, and for options on TDA, right, like for options on TDA, here are my like particular columns that I have. So I have the last price, I have the net change, the open interest, the volume, and the implied volatility, and then the bid and ask. And in my positions tab, I have market change, percentage change. But yeah, just you can click layout right here. So if you go on TDA, you click layout, you can add all these columns to your options chain table. So yeah, I would recommend these. It's pretty standard, like similar to the Yahoo Finance or bar chart options chains. But anyways, it seems like we'll be trading sideways for a good amount of the day. So in a couple minutes, I'll stop the stream for now. Like I probably won't stream again power hour if we don't see anything happen. Like if I already did most of the analysis for the day, then I think I'll just call it. But if we squeeze in power hour, I'll come back. Let me pull the screenshot up again, because you were wondering. You were wondering, right, Joshua? Joshua. So let me write it out like in larger letters. I have last. I have net change. I have open interest, I have volume, and I have implied volatility, and I have bid, and I have ask. And those are the columns. So what was the options calculator you used? It's called optionsprofitcalculator.com. I'll put the link in the super chat. There's a link. So yeah, so here's my options configuration, and I put the link to how you can actually calculate your profits in the super chat. Henny M, why do you increase the IV on the $800 July call? Do you mean when I'm calculating the profits? It's because when the price goes up, the IV goes up, right? And the estimates I use are conservative because January the IV was 1,400%. I set the IV to half of that, conservatively. We always want to calculate conservatively. So I set the IV to 700% for that call. And so the profits that I described earlier in this video are based on 700% IV. And again, it's half of January's, right? Like, I think that's pretty reasonable. Did AMC squeeze? You don't know where you put your money in. This is pure FOMO, no covering, so this is not the squeeze. In my opinion, AMC has not squeezed yet. Most of what we're seeing right now isn't even a gamma squeeze. It's actually been somebody pumping the stock up. Is it a pump it up? I don't know. Like, again, I said earlier on stream, I mean, that I don't have a crystal ball, that I don't know if it's a pump and dump, but there's definitely a lot of FOMO and there's a lot of pumping going on AMC right now. So that's all I can say. I think another question came in. Oh, never mind. No. Okay. I think we're good. But yeah, what's your streaming plans after today? No schedule. I streamed today because I have off from work today. So today, like, it's like a company-wide off day. So like everyone's off today. So yeah, so I took off today, and so that's why I'm streaming like for much of this morning. I do unfortunately have to go back to work next week, so Monday, Tuesday, blah blah blah. And so yeah, unfortunately I can't stream during the day as much going forwards. But I hope that the analysis today like gives you guys like a good forward-looking, view into what we should expect in the coming weeks, right? Which is that we could see a bit of a pullback to 209, and then we could seriously see a squeeze going on. And when that squeeze starts, your options, your July calls, your 716, whatever you have, like if you have 410s, if you have 800s, it doesn't matter. They're gonna appreciate in value a lot. And this is the play that I'm doing, right? Which is the MOAS play. When in doubt, zoom out. Yep. I do not work at Facebook. No. I work at a company that is a bit more ethical. A bit more ethical. Oh yeah. So I think one last question before I hop off, because there's really nothing going on with the stock. I do want to focus on answering questions. Is how to actually do an exit strategy, right? Like, should you use a limit order? Should you use a market order? Which one do you use and why, right? And we can use yesterday as an example. And yesterday what we saw is a parabolic move resembling a squeeze maneuver, right? And so when you're selling during a squeeze and you say, oh, the peak has happened, the peak has happened, and let's sell, right? What do you do? So my initial DD that I wrote was a bit basic, so I want to dive deeper into it and kind of extrapolate the details. But essentially, to prevent the possibility from a March like dump, right, like a big dump, you would set a stop really low. So you set a stop here. You set it below the VWAP, but you don't if you can't do complex orders, you would basically, what you do is, okay, this is a little complicated. I'll try to make it simple to explain. Basically, at the peak, near the peak, if you think it's peaked, you put a limit sell right here. You put a limit sell, you put an LS, right? And if it doesn't fill, you do a thing called chasing. You put one even lower, and if that doesn't fill, you put one even lower. So what you're doing is you're just putting a bunch of limit sells, right? And you're trying to haggle for a good price. And if it doesn't fill, what you're gonna do is you're gonna chase. Okay, so that's step one. That's step one. Okay, guys, you put a bunch of limit sells. And you want to scale out in pieces. You don't want to sell everything at once, because if it goes back up again, right, you're gonna regret selling. So basically, you set a bunch of limit sells and you chase, right? And if they don't fill all the way down to VWAP, which could happen, you set a market order here. You do an MO. you have to get out. Like, no, you're not doing limit sells at this point. You're getting out. So you do a market sell here. I know I didn't mention this part on my DD. I didn't have much time to really edit that DD and make it more fleshed out. So I hope on stream, people can get a more precise, granular understanding of the DD. But basically, what you want to do is, as soon as you think it's peaked, right, you want to put shitloads of limit sells. So limit sell, limit sell, limit sell, and you want to wait for this one. If it doesn't fill, put another one. If that doesn't fill, put another one, right? There's an alternative to putting a ton of limit sells, but you might not get the best price, and that's putting a low limit sell. You put a single limit sell down here, right? That'll probably fill. That'll definitely fill, right? But the problem is it probably won't fill until here, right? You'll get a slippage, right? Like, you'll be like the 53rd person in line who gets their order filled, right? So the smarter thing to do, there's just so many ways to do it, but like, let's pretend the bid was here, and let's pretend the ask was here, right? Then you want to put your limit sell between the bid and ask, and you want to put it towards the bid. You want to put your LS here, right? And so you put a limit sell like that, there's a probability that your order won't be filled, right? Which means you have to chase, right? So you have to do another LS, and if that doesn't fill, you have to chase again, do another LS, right? Now, if you want to avoid the chasing problem, right, what you do is you put your limit sell below the bid. So instead of putting it there, you put your limit sell here. You want to put it below the bid, below the highest bid. And the lower you put it, the higher the probability will fill. It's essentially the same as a market order, really, but you're adding liquidity instead of taking liquidity, sort of, if that makes sense. But yeah, I hope that makes sense. Like, do ask questions in chat if this isn't making sense. If you wanna be more greedy and get a better price, you want to put your LS in between the bid and ask. And if you want to make sure your order filled and be more safe, you can put your LS below the bid. So you put your LS here, right? And so the chasing strategy is where you put a bunch of LSs between bid and ask, and you chase down, right? And if it doesn't fill all the way till VWAP, then you set a market order and get out. And that's the exit strategy. There's no disadvantage with Patricio. You're welcome, by the way. I appreciate that. But there's no inherent evil with using a market sell. Reddit has it largely misunderstood. The market sell is terrible if you use it wrong. You get what I'm saying? The market sell is terrible if you use it wrong. If you know how to use the market sell correctly, there's no damage here to the squeeze. There's no damage. Again, like I explicitly said, don't put a market sell unless it's under VWAP, right? It has to be at VWAP, like under VWAP. Otherwise, you're gonna get stop hunted and killed, right? So yeah, keep that in mind, everybody. Use limit sells near the peak and use market sells near the VWAP, okay? And put your limit sells between the bid and the ask if you want to get a better price but risk not being filled, and put the limit sell below the bid if you want to be filled or have a higher probability of being filled. I hope that makes sense. And if the bid ask moves too quickly, like you put an LS below the bid, right? But then the bid drops super fast because of the volatility, your LS will probably not fill. So that's a rug pull, by the way. That's what a rug pull is. So if we look at today, there was a rug pull, right? This is the rug pull. This is the rug pull. And so what happens is the bid, right? Like the bid was here, but in like the span of like 2 minutes, the bid dropped like really fast. And so when the bid escapes your LS, right? Like let's assume you had an LS here, right? Let's assume you had an LS right there. If the bid or an LS right here, if the bid starts dropping mad, like it goes past your LS won't fill, or have a high probability of not filling. And that's what a rug pull is. So keep that in mind. Okay. Yeah. So yeah, LS first, and then market orders below VWAP if you manage to be stuck in a trade. So the stock needs to fall slow enough for the LS to fill. That's correct. For a high LS. So for a high LS, like between the bid and the ask, the stock needs to go slowly for this to fill, or moderately. But if you put a low LS, like below the bid, there's a higher chance your LS will fill, So if the stock falls in a rug pull, there's still a chance for your LS to fill. So yeah. So keep that in mind. And feel free to ask me questions. Can you please do a cheat sheet? This seems a little tricky to make a cheat sheet for. I guess this video will be your cheat sheet. You can always rewind it. Would a stop limit work better in a rug pull? No, the stop limit is essentially an automated limit sell. The stop limit is just if the price hits this, if the stock price hits this level, a limit sell gets triggered at that level. Or you could program it to sit a limit sell like 10% below, or like 1% below. But it's essentially a manual. It's an automated version of a manual limit sell. So the stop limit doesn't really have any advantages, I would say. Can you comment on stop losses? I don't know why people use stop losses. Don't use stops. Stop losses are different from, like, typically a stop loss is when you set an order, right, and you specify the stop at time of order, right? So if you bought a share at 250, you can specify a stop loss at 240, right? And it's the same. It's essentially the same as putting a stop order in. Like, it's really just a market order slash stop order, an SO or MO, right? So my comment on a stop loss is the same as my comment on a market order. It's the same thing. Where do you find the bid? Karox. Oh, easy. Level 2. Look, if you go to level 2 right now, the highest bid is $246.25. So just look at level 2 for the highest bid, or you can check here. Look, the bid ask spread right here, 245.51. So here you would put a limit sell at 246, or no, it's 245.5. Yeah, you probably put a limit sell at 245.5, pretending this was like the squeeze bid ask. How to set up VWAP with correct settings? Put it on 14 days, I think. Indicators, VWAP. Like, my VWAP is set to 14, so set your VWAP to 14. VWAP 14. It's called VWAP 14. So on TradingView, look for VWAP 14. Well, anyways, I think the stock is just gonna go sideways for a while. Taking a look at AMC, yeah, AMC is also gonna go sideways for a while. I think today is mostly just gonna be consolidation, consolidation and sideways movement. So yeah, I think I'll hop off for the remainder of today. I think I've gone through most of the analysis topics, and I hope that people have a rough understanding of what's, you know, kind of going on with these two stocks. So yeah, like, thanks for showing up to the stream. I'll probably won't be back power hour unless we see like it start squeezing again, and yeah, I'll be back power hour. But again, I only really stream when things are happening, right? So yeah, thanks for showing up, everyone. I hope we squeeze soon, and I hope to see everybody deep in the money. Peace.